morning. Welcome to today's 5 with Fitz. The markets are down in early going following more Chinese bloodletting in the Hong Kong market. Contrary to what many people want to believe, events taking place thousands of miles away do have an impact on our financial system because they are so closely interlinked. However, instead of running for the hills, use the distraction to your advantage. Here's my playbook. Point number 1, the markets will move when they see what big tech does. This is a very simple proposition, and it's even easier to understand why. The big 5 tech titans make up more than 1/5 of total market capitalization for the S&P 500 index as of the end of Q2 at 22%. And the big 5 tech titans are decreasing in influence, which means, if you think about this, other companies are catching up. According to CNBC, the proportion of profit provided by big tech actually decreased from earlier in 2020 when the big 5 companies provided nearly a quarter of the index's full year earnings, 23.8%. We talk about the importance of picking winners frequently, but it's numbers like these that reinforce staying with them, especially when nearly 85 to 88% of companies are beating top and bottom line. Please note, if you're a member of the One Bar Ahead family, you can see an expected full earnings breakdown and price targets later this morning in the weekly update. Point number 2, which big companies to buy ahead of even bigger earnings? Tesla's Monday, then it's Apple, Alphabet, and Microsoft on Tuesday. Later in the week, we've got Amazon and Facebook. The pattern the last few quarters has been to sell on good numbers following a strong run into earnings. So I'll be looking to add shares if that happens. I'd encourage you to think about doing the same thing if you're following along and interested in big picture bling like I am. The profits these companies have created to date pale in comparison to what they will do in the years ahead. Plus, they're an outstanding way to protect your money from the ravages of inflation. Big tech will, as I told Ashley Webster earlier this morning on Barney & Company, knock the leather off the ball. You can watch my take later on this channel. Now, not to beat a dead horse here as the old expression goes, but take Apple for example. Tim Cook is growing the company at 50% a year. Net income's up 100%. Net profit margins 30 to 40%. My back of the envelope calculations suggest $85 billion or more top line and maybe $125 bottom line. The street by comparison is at $72.94 and $1, which I think is hopelessly conservative. Apple may just be the one big tech company that rises above the looming and very punitive big tech regulation. Point number 3, Team Powell, the Fed, has lost the plot. Inflationary pressure is mounting, and companies like Kimberly-Clark and General Mills are raising prices to maintain profit margins. I don't know the former, but I do own the latter. The Fed has a serious credibility problem. Not that it didn't before. I don't expect much from the FOMC statement other than a lot more jawboning about how temporary inflation is, even though we all know from our wallets that it's very, very real. Point number 4, China's most egregious move yet. Chinese education stocks absolutely got whacked last week, and the carnage is continuing today. For those of you who missed the story, the CCP is allegedly forcing for-profit educational tech firms in mainland China to turn into non-profits. To put this in perspective, this is a $100 billion market. Imagine the United States government suddenly telling health insurance companies that they could no longer do anything for profit. All heck would break loose. To a point I have made repeatedly and which should be foremost in your mind, the CCP does not care how much money it wipes from the face of the earth. It values control over profits. Point number 5, call me crazy, but this could easily go bad for Amazon. I hope Amazon has amazing legal reserves because the company now has keys to thousands of buildings in the United States, ostensibly about convenience for package delivery, but I'm more concerned about hacking. My friend and colleague, the super sharp Ray Wang, CEO of Constellation Research, shares my thinking. I reached out to him early this morning for his take, and he said simply, it's one thing to protect against rogue drivers, which seems to be working, but the potential for hacking is on his mind too. Bluntly speaking, my fear is very simple. I worry that criminals will figure out Amazon's devices the way they figured out how to hack garage door openers back in the day. There's simply too much opportunity if they can get in the front door. Bottom line today, People talk frequently about stocks they could have bought and how much money they would have had if they did. I don't have an awful lot of patience for that. Call me cynical, but finding the next great winner is something you can do something about immediately, as in right now. Use today's drop to go shopping, using lowball orders, selling cash secured puts, use the fence. The key point is always play offense even on big down days, especially on big down days. And of course, make it a great day. You got this, I promise. I'm Keith Fitz-Gerald, and I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.